Hello and welcome to The Marketplace with me, Lukman Haris. Over the past week or so, many events have shaped the local and the global economy as we know it, from more political uncertainty in the United States to more outflows and inflows and then outflows again in the Bursa Malaysia. The markets have been, as always, eventful. So today, on this special episode of The Marketplace, we pause to discuss what we've seen in the markets and what to expect as we go forward in the year. And joining me to do just that is Kenny Yee. He's the head of research of Rakuten Trade. Kenny, welcome to the show.
Thank you, pleasure.
Let's start with the ringgit. You are incredibly bullish on the ringgit. Can you tell me your number for the local currency by the end of the year and why?
Okay, we believe the ringgit may retest the 4 ringgit per US dollar level. Basically because we find that ringgit has got a very close correlation with the Chinese renminbi. As you know, of late, the Chinese government has put a stamp on the outflow of Chinese renminbi, okay, via this global buying spree. I think that move would actually strengthen the Chinese renminbi as we go forward. And judging from the current movement of the Chinese renminbi, okay, you can see that from 2015 to 2016, we've detected about 550 billion USD of outflows from China, out of China. There was also the period where we saw the renminbi has declined the most, from around the 610, 620 level to around the 690 level, okay, per US dollar. So at the moment, it's stabilizing around the 660 level, and we expect the renminbi to strengthen. That would also pull the ringgit to a higher echelon as we go forward. That's why we are rather positive on the ringgit going forward, and certainly the 4 ringgit would be our first level.
By the end of the year?
Hopefully.
Quite optimistic.
Hopefully.
Hopefully that will come true, of course, but would that be the only factor that's going to drive up the ringgit?
Not necessarily, because as we know, there has been a lot of Chinese investments coming in into Malaysia. We have also compiled a list of Chinese, announced Chinese investments totaling around 250 billion ringgit, excluding Bandar Malaysia. I think once this takes off, I think the demand for ringgit will certainly, strengthen. Okay, and also, okay, that one another thing that I've would like to add is that since the IMF inclusion of the renminbi into their special drawing rights, okay, from 0% to around 11%, that would also potentially attract about 12 trillion USD in global reserves. If you can imagine about 10% of these global reserves going after the Chinese renminbi, we are talking about 1.2 trillion USD. I think that should also be another catalyst for the Chinese renminbi to strengthen.
But there have been some headwinds recently for the ringgit. Recently, Singapore announced that they are making available the trading of ringgit futures on the Singapore exchange. This was met by swift objection by Bank Negara Malaysia and a few others. What do you think this will do? Will this have any true effects on the local currency?
I think on a knee-jerk reaction, they could be, because we tend to look at the rates of offshore rates, to justify the rates of the ringgit against the USD. And of course, once this ringgit futures being traded, it could inevitably also dictate the rates locally, But having said that, as we move on, there is more confidence on the ringgit. I'm sure we'll break off from this reliance on offshore, rates. So quite confident that maybe this offshore, futures trading on the ringgit may not have any much direct impact on the actual strength of the ringgit.
Well, of course, when we compare the ringgit, we of course compare it to the greenback, the US dollar. I mean, political events in that country have been a bit unpredictable and volatile. Do you see more political uncertainty in affecting investor sentiment towards the US, and what will it do to the dollar?
I am seeing not political uncertainty, more like financial uncertainty, because US is in a very peculiar situation at the moment. One part, they're talking about trimming the Fed's balance sheet of 4.5 trillion USD. On the other hand, Wall Street is trading at a record high, record valuations. I say if the Feds do trim their balance sheet, okay, I am sure some knee-jerk reaction, negative knee-jerk reaction would have impact on the companies on Wall Street, because now I think companies on Wall Street are becoming more and more reliant on their earnings to justify such high valuation. If any of this falls short, I am sure trigger some sort of a sell down on the US equity market.
All right, we'll continue this discussion after the break. We'll come back with Kenny Yee, Head of Research for Rakuten Trade, the marketplace. We'll be right back. Don't go anywhere. Marketplace with me, Lukman Haris. So I've been speaking to Kenny Yee. He's the head of research for Rakuten Trade. Kenny, before the break, we talked about the situation in the US and the possibility of whether there's a political uncertainty or at least volatility in that country. But seeing what has happened for the past few weeks politically and the movement of the dollar, it seems as though they are used to having this volatility in their political scene that is not affecting the dollar as much. Has all the political craziness from the Trump administration been factored in by economists and even by the normal people?
I think at this point in time, I think it's been mostly factored in, unless he comes up with another surprising gesture of or antics from Trump. But certainly at the moment, most of it has been priced in.
Talking about surprising gestures, I mean, some of his crazy promises during the campaign trail, for example, imposing a 35% tariff on the likes of, Mexico and other countries. It's not. Does not seem to be following up on those promises. Do you think he will back out?
Not sure at the moment, but certainly, ever since he became the president, all he did was he's been blowing hot air all this time, and no action at the moment. Hopefully no action as we go on, and then we are fine.
All right, let's come back to the local front. The stock market and the Bursa Malaysia. We've been seeing very good, foreign fund inflows since the start of the year, but recently it has been a bit choppy. We've seen foreign fund outflows now after the positive performance that we've seen in the first half of this year. So is the honeymoon over?
In fact, I feel that we're just in the middle of it. It's not over yet. I think there's still some more legs for the market to move up and more inflows for the foreign funds to come in. At the moment, I think we are close to around net inflows about 11 billion ringgit. And I believe, especially towards the fourth quarter of this year, I expect more inflows to come in when they try to rebalance their portfolios and things like that. Especially, most funds would eye at Asia as a whole as their investment preferred destinations for the investments. Because if you look at the moment, US is being terribly overvalued. South America, you won't touch it, okay? Europe, I think, is pretty sleepy at the moment. I think Asia is still where the attraction is for valuations.
And ringgit has been the best performing currency in Southeast Asia or even in Asia. So if you want to translate that into the stock market, what do you think will drive, especially foreign investors, to come to the Bursa Malaysia compared to other regional peers?
You're right that ringgit has been the best performing currency within ASEAN, but it has been the worst performing currency over the last few years. And judging from the performance, I think it's still lagging the other currencies. I mean, if you compare to baht for the moment, as a comparison, I think from 10 now to about 7 something. So we are still lagging. So I still consider ringgit as a cheap value proposition for most foreign investors. And although market valuation now is at the average, about 16 times at the moment, but certainly the cheap ringgit would be added catalyst for the inflow of foreign funds.
A lot of parties have increased their GDP forecast for Malaysia for this year, including the World Bank and a few other notable entities as well. Are you ready at this point to jump on this bandwagon and say that you can increase your projection for the GDP growth, or not yet?
I think we would prefer to wait and see. I think most of us is looking at slightly above the 5% level for GDP growth this year. I think we have to wait and see what happens then, maybe do some upward revision.
In terms of the sectors, what do you think are going to be the key players that's going to drive growth for the next few quarters?
I think the financial sector, the banks, despite recently there have been talks that, loans growth is looking to slow down to around the 5% level, but looking at the earnings for most banks, we are still seeing double-digit growth, between 10 to 12% for this year, and then a high single-digit growth for next year. Okay, certainly the banks would spearhead, the recovery of the economy and also the country.
Right. Thank you so much, Kenny Yee, Head of Research for Rakuten Trade, for joining us. And that wraps up this episode of The Marketplace. Be sure to follow us on Facebook, Twitter and Instagram at 501 Awani. Download our app, as you can see, available on Google Play and also the Apple App Store. Listen to this interview on podcast, search for Astro Awani or The Marketplace, wherever you get your podcast. Thanks for watching. Lukman Haris. Have a nice day.